let's look at where we are in the U.S. markets right now, and then what is the theme going into this week? What are we looking to do this week? So first things first, whenever we look at the overall context of the markets, we look at 12-month momentum, specifically of the S&P 500, the MSC All World ex-USA Index, and short-term treasuries. So right now you can see that the S&P 500 is just absolutely killing the MSC All World ex-USA Index and short-term treasuries. And what that tells us is that we want to focus on the U.S. markets. So we've been focused there for a while, and we want to continue to focus there until that dynamic changes. The second thing that we look at is breadth. Breadth really tells us, when you boil it down, it's one of two things. Is something amiss with the price action of the index in question, for example, the S&P 500, or is everything in line? Right now, everything's in line. We had an increase in price in the S&P 500 last week, up 0.86%. We also had an increase in breadth. So those two together, it tells us that nothing is really amiss according to breadth. When we add all this up together, we get a barometer. Our barometer simply tells us, are we risk on? Are we taking the risk? Are we going to risk money or not? Are we in a bear market situation where we need to be out of equities and looking at other alternatives? So right now, we are in risk on stance according to the barometer. We've got trends are up on the longer term and shorter term, looks pretty good. We've got the right sectors making new highs. I mean, it just frankly, technically, it looks pretty good. So doesn't mean that we're not at the top of the market right now, but the barometer, when we look at it, we add it all up, risk on stance. Okay, and then we get into the context of the S&P 500, and this is a little bit more of the nitty-gritty of where we are. And so here's a chart of the S&P 500. I think there are a few key things to point out when we look at the price action of the S&P 500. First things first, we're right at the very tip top, barely breaking out of this large trading range. Remember, the stock market and the equities are publicly traded markets, frankly, any of them, they really can only do one of three things: up, down, or sideways. The larger part, we've been going sideways. So now we're testing the top of that sideways move to see if we can continue and advance higher. So you can see the trading range, about right, the top is right about where we are, a breakout, a weak breakout, but in fact a breakout. And then the bottom of the range goes all the way down to the 2575 level. Within the trading range, we've got this nice bull channel, and we're still trending up there on that time frame. So it looks good. The bulls this week want to see a strong break to the upside, a big bar to the upside, up over 1% for the week. We'll see if they can get that. And frankly, if they can't, the longer that price stays in this range and the more that it stalls, the more the case for the bears. So right now, still looks bullish. Could break up to the upside or in fact fail. Really don't know which way it will go. Looks good for the bulls right here. If they can't get this thing higher quickly, right out of this area, it's going to build a stronger case for the bear setups moving into the weeks to come. The theme for this week is definitely to continue to focus on U.S. markets. We want to focus on the strongest sectors. One of them is technology. So technology right now is breaking out to the upside, and here's a look at the chart of technology. Three things that I want to point out here. Number one, and the most important, we've got a strong breakout that happened last week, up 2.43% for the week. This is beautiful. This is exactly what the bulls like to see. The second is we've got a second purchase range down in here. So, look, breakouts can fail. Nothing is 100% certain. That's just not the way that the market works. So if in fact we do get a failure from this breakout and price meanders back down into this range, then we'll look at getting into a second position. If it goes even further down, then we've got our original stop right here. And that's the third thing. The third important thing that I'd like to say. We've got this original stop down here. But overall, This is the exact price action that the bulls love to see. We've got higher highs and higher lows. Each time there's this channel of trading range, it breaks out and continues higher. Continuing on with the theme or the game plan for this week, our U.S. positions look great. Small caps making new highs, U.S. growth making new highs, healthcare making new highs, U.S. aerospace and defense making new highs. I mean, it just looks awesome. Transportation, not quite there yet, but they're close. They're close. So I doubt they'll make a new high this week and break out of their range, but could happen. We'll see. One's a little bit less, so we're going to go from the very best to the very worst. All right. The second, commodities. And it's not that commodities look bad. It's just that they've been, we had this move up, and now they're just basically in this trading range, haven't been able to break out to the upside. So we'll see if we can get some upside breakout this week. But right now, they're probably middle of the road as far as strength, what I'd like to see. The third thing is the treasury position. Every time that thing gets to the bottom of the trading range where our stop is, it does this Teddy turnaround, turns back to the upside. And that's where we are now. We've had a few good weeks of it. Went down to the bottom of the trading range, really thought that we were going to get stopped out, didn't break out to the downside and started to go up. So, you know, we're relatively close to a stop on there, but probably not going to happen coming into this week. The weakest one by far is the international position. You know, the international position just doesn't look good as far as the longer term context. So, you know, we had this really good run in the market, breaking out, get a little bit involved, and then the thing comes down. We've had a relatively large pullback. The good thing about all this is that in this pullback, we've had this little down at the bottom right where we wanted to catch support. It caught support, bounced a little bit of a bounce, and then it's come back down, tested support again, and now we're seeing that bounce. Now, I don't know if the bounces can continue, but that's what we want to see. The bulls, we want to see the bulls come in. Ideally, they come in a lot stronger, but at least they've come in a little bit. Don't know if we'll get stopped out this week. That's the one where we're closest to the stop, is that international position. And so we're just going to hold tight on all that stuff. If we do hit the stops, of course, we're going to execute it. We're not going to mess around. We're going to get out, preserve capital. One last thing before you leave. Got to plug my book, Home Run Financial Planning. If you don't have a copy of it, get a copy. It's going to show you how to create a financial vision according to your goals and your values and what's important to you. Not anybody else, but you. And then once you have that vision, how to create a plan, implement that plan, and just as important, how to monitor the plan to make sure that it's working for you. Get a copy. Go to redoakfg.com, FG for Financial Group, redoakfg.com. I know you're going to love it. I'll mail a copy out to you. Complimentary, won't cost you a thing. Have a great week, and we'll talk to you next time.